G'day everyone, welcome to another episode of Aussie Dollar Insights. I'm Aussie Dollar Man, and in this show we take a look at the Australian dollar US dollar currency pair through the lens of WD Gann analysis. I've got loads of stuff to share with you tonight, including a price forecast, a time forecast, and some more tunnel through the air training. But before we get into all the good stuff, I thought I'd share with you an interesting news article that came out this week. You can tell that we're approaching election time in Australia because the muckraking has begun, and instead of the incumbent government coming out and telling us about all the wonderful things that they've done while they're in power, they've gone straight for the muckraking and digging up the past. Now, I try to keep this channel as non-political as possible. Firstly, because I'm not really informed when it comes to politics in Australia. Maybe I should be more informed. But secondly, because I know really good people on both sides of the divide who care a lot about their political party, and they genuinely think that their party is the party that cares and is going to do the best for Australians. So I try not to get involved with that. But the story that came out this week, opposition leader Peter Dutton bought some shares in banks just before a large stimulus package was released by the Australian government. Now, obviously that's not a great look. I'm certainly not implying anything. Now, isn't it funny? Someone comes out and makes some good share trades and people immediately assume, oh, they must have had insider knowledge. Whereas I, on the other hand, immediately wonder, gee, I wonder if this person knows Gann. Wow, they timed that cycle beautifully. I guess we'll just never really know what made Mr. Dutton make those one-off share purchases. But from a trader's perspective, all I'll say on the matter is there were cycle reasons for those lows to be coming in. Do I think that's what was going on at the time? No. Do I think that was the reasoning behind the trades? Not really. But at the end of the day, those cycles are there whether we know them or not and whether we like them or not. And they don't just work in financial markets. Gann says in the Ticker Investment Digest article, and I have actually tracked these cycles in my personal life, and it's uncanny the way that they work. But that's a discussion for another day. Let's get on with this episode of Aussie Dollar Insights. We're going to start with a review of last week's Aussie Dollar US Dollar market action. Then we're going to look at a preview for the week ahead. And finally, I've got some more tunnel through the air training for you, continuing our work on the Bible that we started in last week's episode. Now, I know at times that this work, this tunnel training, can feel like a little bit of a drag. It can be a little bit dense, very heavy work, a lot of thinking to be done. But I assure you, if you continue with the hard work, it does pay dividends over time. But it does require that investment in time and energy and effort before it starts to reveal its secrets to you. And of course, if you're not really interested in going down that deep research and study path, that's fine. If you're interested in the Australian dollar, US dollar market action and some Gann swing trading analysis, just stick around for the first half of the episode. Before we kick off, just a quick disclaimer. This video is designed to be educational in nature and should not be taken as a recommendation or trading advice. The presenter will not accept any liability for any losses as a result of trades taken or not taken based on the dates or concepts presented in the video. The market applications are based on the presenter's interpretation of the works of Gann, and in particular his book, The Tunnel Through the Air. All right, let's kick off with the Australian dollar review. This is where we finished up last week. I pointed out that we had touched the 37.5% retracement milestone. I didn't think that that was a final top. I still don't think it's a final top, but it looks a little bit more final than it did last week when we were looking at it. I don't think it's final, but it's obviously had a bit of a tumble this week. In that episode, I identified this range up here, which was a contracting range compared to its last run up. And I said it's retraced a bit through 62.5%. The key level will be the 75% milestone. If it breaks through there, it's going to keep going and probably break through here. And if we do break through there, we'll see a little bit more of a pullback there. And that's what we saw this week. We did see the market going down. So at the beginning of the week, that's where we ended last week. We actually had this is the 4-hour chart. The first 8 hours or so of trading on Monday, the Aussie dollar rallied quite strongly. And this is why I often say on the Australian dollar and on the currencies in general, you'll often see a move in that first 8 to 12 hours or so on a Monday. The way the FX markets work is that there's no one single exchange where FX is traded. It's dealt between banks, and obviously there are different banks at different countries around the world that operate in different time zones. So it kicks off with the New Zealand banks. That's the earliest ones to open. And then you've got the Australian banks kicking in the morning around 9 a.m. Sydney time. And then Obviously, the Asian banks come next, and Europe in the afternoon, then US in the evenings, all Sydney time. But often you will see at the start of the week a move in one direction, and then that move is wiped out and the market goes completely the opposite direction for the rest of the week. Now, I'm not saying to wait and never take a trade on Monday morning, but what I'm saying is just be very careful and make sure that you're only trading reliable setups. If you are trading, I mean, you should only trade reliable setups at any time, of course, but especially on Monday mornings, because you do get those false moves, generally on lower volume, because Europe and the US banks, because the European and US banks aren't awake, aren't trading yet, so the volume's not massive. Wait before making a decision that the trend has changed. Wait and see what happens overnight on Monday. Now, from a trading perspective, if you see a setup, you have to take it. You can't say, oh, I better wait a day and see what happens overnight. But it's more so if you're going to change your long-term opinion, just keep in mind that that move on a Monday has a habit of reversing and going the other way. Now, once we broke through 75% there, it did hover around for a little bit, but then bang, it spent the rest of the week running down, and we've run down and closed pretty close to the low there. If you're looking on the chart over here, remember on this daily chart over here, we touched the 25% milestone several times, then broke through, and then we've gone to precisely that 37.5% milestone, which funnily enough is roughly what we retraced up here for that weekly first range down there. And now as we've gone down, the week's low was right on that 12.5% milestone. I'm going to talk a little bit more about that, where I think this may go. But before we do that, let's have a look at trading that actual top. Often in the market, trading opportunities come around when you least expect them. Now, when the market hit that 37.5% milestone, you should at least be aware that that has happened, because the market has been reacting to these milestones, as I've been discussing with you in previous episodes of Aussie Dollar Insights. Now, when the market touched there, it fell back. It certainly didn't pull back to any great extent. Then it had another run up and it hit the bar and it hit the milestone precisely. If you're a swing trader, you know that if the swing chart turns down from there, that's a first lower swing top off a resistance level. So it could be a trade that's worth having a look at. Remember, this is not trading advice. This is trading theory, according to the works of WD Gann. I'm not a licensed financial advisor, and I really have no interest in being one. But you can see here, we had an inside bar after this, and then a down bar the next hour after that. So these are all 1 hour bars. So you hit the top here, then you've got 1, 2, 3 hours later, you hit the top again. Fourth hour is an inside bar, and then the fifth hour, that swing chart turns down. Now, it's not a guaranteed take every day of the week trade, but entering on an hourly swing chart trade here, you're only looking at 10 points of risk. Okay? And the market then went on to run 200 points. 200 divided by 10, that's a 20-to-1 reward to risk ratio. If you're ever wondering, how do people get these large reward to risk ratios on their trades? That's how it's done. You can either take a huge move in the market by increasing your reward, or you can find a really tight entry using an intraday chart. Intraday charts have their own challenges. You tend to get more stop outs on an intraday chart than on an end of day chart. But if you can find a clear resistance level and you can find a tight entry there, if you're wrong, you lose 1 unit of risk. You might be risking $50 per trade or $500 per trade, whatever it is, you lose 1 unit of that. If you're right, 20-to-1, that's not bad for a week's trading. And you don't even need that large of a trading account for that to start to become a decent sort of an income. For example, let's say that you're risking $200 per trade. You'd need at least a $10,000 trading account for that. But if you're risking $200 per trade, a 20-to-1 return there is about $4,000. And if you can do that once a week across a series of markets, that's 200 grand a year. Food for thought there. It doesn't always have to be a massive complex equation with 50 different indicators pointing to a trade. Oftentimes, it's the simple things that work best. But let's look at the side-by-side swings, as I always do, monthly, weekly, and daily charts. So monthly on the left here, that's the end of February now. So obviously I'm recording this on the weekend of the 1st and 2nd of March. It was a very strong move up here on the monthly bar, but the close, it's actually closed below the midpoint of the bar there. It's sold off very, very heavily there. The weekly chart over here, you can see, it made a large range up, bigger than the last couple of weekly upswings. Okay, so it is showing some strength there. It has fallen to that 12.5% milestone there. I think it may go a fraction lower. We'll talk about that when I get to the forecast. But it's a pretty heavy sell-off, and that's highlighted on the daily chart because this was all one daily swing down. Remember a couple of weeks ago when it started turning up out of the early February low, and I was all excited about the market running up from this low. And I said to you, we've run up on the weekly chart, it's looking strong, and it's all one daily swing. And I said a weekly swing is not just going to happen. In most cases, it's not just going to happen in one daily swing. Well, there you go. You had your daily swing, pull back, little daily swing there, and then another daily swing there, another daily swing there. Swing charts, the reason we look at them side by side is that moves tend not to happen in just one swing. A monthly swing tends to have at least 2 weekly swings. Yes, there are occasions where you only get one, but I'd say over 90% of the time, you get at least a second weekly swing there. Now, that weekly swing may just be a run into a lower top and then bang, off it goes, but there should still be a run up. I don't expect this to just drop like a stone from here. If it does that, so be it. I readjust my thinking and I look for the next trading opportunity there. But looking at this on the daily chart, even though I'm saying I think that the weekly has got another upswing, well, this weekly downswing, that's all one daily swing. It's at least got to put in a higher bottom on the daily chart before moving up, but it may go up a little bit and then come back down a little bit as well. And I'll talk to you about an interesting price target that I've got there on the Australian dollar in just a moment. Before I do that though, I just want to take a look at the British pound. The pound US dollar often moves in a very, very similar pattern to the Aussie dollar US dollar. And you may see one of them move a lot more steeply than the other, but the pattern is often very, very similar. So it pays to have a look. And on the pound, it wasn't that much of an exciting week. You can see there's the end of February's bar on the monthly chart. That's actually probably in the top third, almost top quarter of the bar, whereas the Aussie came and closed below the midpoint of the bar. So the pound looking stronger on the monthly chart compared to the Aussie dollar. And here you can see that forecast I've spoken about previously on the pound, that 131 level, which I think will be a really key level if the pound gets up there. That could be a really nice monthly top to short. That's not a recommendation or trading advice, but that's certainly a number that I'll be watching on the pound. But you can see on the daily chart down here, only a couple of days down, and there's not much going on. It's actually been pretty sideways on the pound so far. So it's certainly a long way behind the Aussie dollar in terms of a pullback. It's only pulled back a bit over 100 points, and its pricing is almost double the Australian dollar. So from a percentage point of view, it's a very, very small move compared to what the Aussie dollar did. So I think the pound is still sitting pretty and is well on track for that 131 level. And if that's the case, I don't think the Australian dollar is done yet either. I think that that's going to rally, and we'll talk about that in just a moment. So that's what happened last week on the currency markets, but I imagine for most of you, you're more interested in what may happen this week. So let's have a look at our Australian dollar forecast for the week ahead. Firstly, as I said, no beating around the bush here. This is all one daily downswing as part of a new weekly downswing. I wouldn't be interested in going long. If I was looking to take a long trade here, I wouldn't be looking to jump in until the market has put in a higher bottom here. That's the first thing. Second thing I'll point out is that this 75% level is crucial. If we break that level, we may still rally a little bit, but we'd be rallying, in my opinion, into a lower top. But that's a key level that I'm watching. I call that a point of no return. When you look at these ranges and the 1/8 of the ranges, often the market will make, if it's had a run up and it's pulling back, it will pull back to the 37.5, 50, 62, or 75. When it pulls back to 37.5, if you're using this tool, which again gives you in how to make profits in commodities, if you're using this tool in isolation, it's hard because you're thinking, is it going to stop there or is it going to go to 50? Maybe it'll go to 62. But once it gets to 75, I don't like to give you trading advice, but you can almost take a trade there because you know it's a one-off. If it then turns around and stops you out, well, you know it's probably not going to recover from that. So you're not trying to chase that market. So that's one level I'm definitely watching. You might want to write that down, 61.67. That's a key level. We know that on a different ranges card from the monthly downswing, that this is already sitting on that 12.5% milestone. If it goes down to 75, that's not too far below that 12.5% milestone. I wouldn't be too worried about that. I still think that would hold. From a weekly swing chart perspective, and these swing charts are courtesy of Profit Source software that's put out by hub.com. It's a piece of software I've used for Gee, 20 years, doesn't time go? But on a swing charting perspective, that's your weekly swing chart. The market has run up and it's cleaned out several tops and it has given an expanding range compared to the last two runs up. Okay, this move down looks scary, but compared to the last weekly swing down, we've only run 217 ticks compared to 245. So at the moment, if we don't go more than 245 points down, so another 28 ticks or so, well, the weekly swing chart still looks okay. Oftentimes, you get a retest. So you have a major low come in, and then the market runs up. I would have liked it to run a little bit more than this, but the market runs up, and then it will have a retest because nobody, well, except for when I put out a video called The Australian Dollar Has Bottomed, but nobody tends to come out and say that's a low. So people who are looking at the Australian dollar and they're bearish on it and they're thinking it's going to go down, they see it up at 64 cents and they say, oh, great, I'm going to short it here and go down. And it does start to go down. But it can have that steep run down, and it can often get very close to that low on the retest. So it's not always the easiest thing for a trader to follow. But as long as it doesn't exceed that 245 points, or maybe it goes 247, 248, but as long as it's around that level, from a swing trading perspective, if the low comes in there, that's still a pretty decent trade. So as it stands, the swing charts are still okay, but this weekly swing is still a work in progress. It's all one daily swing. Now, just to look at that from a different perspective, this is the last weekly run down. As you can see, it happened in two moves, run down there, little pullback and a run down there, two daily swings down for that weekly swing. Here's our current weekly swing down, and there is the 100% point compared to that last range there. So if we get down to 61, 65, that would be a repeating range compared to this range over here. 6165, you might want to write that one down. Did you write the first number down? Look at your two numbers and tell me what you see. They're identical, 6165, 6167. You've got 2 points there where a retest low may come in and often does come in. Okay, so that's a target this week that I'll be watching very closely, 6165. We may hold that 12.5% monthly milestone. Obviously, I'm looking at multiple timeframes there. If that's the case, I'll be looking at the swing charts there to see what happens, but I think that's got a fraction further to fall this week. But that is a key level. If we break through there, then that becomes a monthly top just about. Technically, we've got to break this low for this to become a monthly top up here, but it's almost a foregone conclusion that if we clean out this 75% milestone, we'll be breaking that low and going further down. Now, that's the price forecast. In terms of dates, the next two key dates that I think will be very important to watch are the 8th of March and the 13th of March. Now, one of those will be the next bigger picture turn on the market. I think it's more likely to be a top. Maybe we run up to a 50% retracement, but maybe it does come in as a low. Okay, so we'll keep an eye on that. From my perspective, if we were to hit this low down here on the 8th of March, I say that's probably a decent low and we'll have a good weekly run up from there. Okay, so a couple of dates to watch, one price to watch. For me, this price is going to be a big key. If we get down to that level, I'll be looking at all of my swing charts side by side and looking to see what happens there. Now, if you like looking at charts like this, there's a couple of places to go to expand your knowledge, as I've mentioned before. One is Gann's book, How to Make Profits in Commodities. If you're serious about learning Gann, you really should get Gann's books and courses. If you're serious about learning form reading, I learned all this stuff. Everything that I'm showing you, it's all from Safety in the Markets Active Trader Program online training. It would be remiss of me not to acknowledge that. Sometimes you see people online, on YouTube, on social media, and everything is theirs. Look at all this great stuff. I know it's all me. I invented it all. I didn't invent any of this. I got all my time stuff from Gann. I got all my swing trading and form reading stuff from that Active Trader Program online training there. Couple of grand, money very, very well spent. Just my opinion. Looking at the economic calendar this week, we've got GDP figures coming out for Australia 11:30 a.m. Sydney time on Wednesday, the 5th of March. You can see that the prediction there is 0.5% compared to 0.3% previously. And this will be interesting because the Aussie has copped a bit of a hammering over the last 4 or 5 months. This will give us a little bit of an idea as to just how warranted that hammering has been. And if we get strong numbers there, well, I'd expect that the run-up would continue for quite a while there. And if we do get strong numbers, well, we probably will see a decent run up, lasting at least a couple of weeks. But here's the thing. I don't think this announcement is going to give us, whether it's really terrible or really fantastic, I don't think it's going to give us a top or a bottom. I think that the trend will already have been established by that point, by the 5th of March, and we'll just see what happens. But I think it will continue the current trend, which is so often the case with news stories. You see that the trend is heading one way, the news comes out, and then the market interprets the news with the trend, and the trend just continues on. It's amazing how markets work. The more you see these things, the more you realize that the things that Gann said in the Ticker Investment Digest article, which, by the way, I recorded, and you can listen to that on this channel, but the things that Gann was saying in there really are true. The other area that I'd be watching is this 4:30 a.m. Saturday morning speech by the Fed Chair Powell. These things can slide under the radar a little bit, but it's not uncommon to go to bed with a strong trend in one direction, only to wake up and see that somebody said something overnight and the market has run the other direction in a very strong move. The main reason I'm interested in this particular one is that March 8 is one of the dates that I put out for my forecasts, and it's one that I think that we'll see a turning point around. All right, so that's it for the Aussie dollar analysis. If you're only interested in the form reading and the swing charts and the FX stuff, I'll probably bid you farewell now. We're going to get into some tunnel through the air training, which I know is not for everybody, and that's fine. But if you're here for the tunnel training, welcome. I hope you enjoy it. If you're new to the channel, there is a Tunnel Through the Air audiobook playlist on this channel. And if you're not sure what the Tunnel Through the Air is, it's a novel written by W.D. Gann, which supposedly contains all of Gann's trading secrets. In the Ticker and Investment Digest article that I just mentioned, and if you are unfamiliar with that, I'd encourage you to read that because it gives you a good background as to what Gann believed and the sorts of things that he was looking at. But in that article, Gann spoke about the law of vibration, and he said he would not reveal it for any price. However, he has encoded all of this stuff in the Tunnel Through the Air. He hasn't made it easy, but it is all in there. That's certainly my belief and my experience. And the more that you dig into that book and you do some research, if you don't know where to start, have a look at my playlist, recommended reading for Gann researchers. But if you do the work, you will start to see things in here. Now, you won't start to see things instantly, and that's the challenge, and I'm sure that that's how Gann wanted it. If you want this stuff, you have to earn it. He said you have to invest your time, your money, your energy into learning this stuff. So, tunnel training. Hope you've enjoyed your tunnel training so far. Last week, we started to look at the Bible and the website BibleGateway.com. This week, we're going to dig into the Bible verses a little bit more and see what we can find there, if anything. So let's go back to the very beginning of Tunnel Through the Air. Would you believe I have heard the song Do Re Mi from The Sound of Music 3 times today? And the beginning line, let's start at the very beginning. It's a very good place to start. And here we are at the beginning of the Tunnel Through the Air, and Gann is already throwing things at you. Here in the foreword, what I'd like you to do is pause the recording and study this section that I've given you here, and see if you can find pi. Now, you may not know what pi is. You may not know how to find it or where to find it. See if you can find pi. Then if you do find it, type I found it in the comments below. I'm keen to see who found it before actually having it pointed out. Now, technically, there's no prize for finding pi before I show it to you, but just take that as a little bit of a nod from God, from the universe, from Gann. I'm not sure, but take it as a little bit of a nod, because when you're ready, you start to see these things. And often they're things that you haven't seen despite reading the book 1, 2, 3, 4, 5, 10 times before. I'm sure I read this book more than 10 times before I saw what you're about to see. So, did you have a crack? Did you find pi? Well, Gann's actually given us a Bible verse here. If you're not familiar with the Bible, you may not know that, but Proverbs is a book in the Bible. And the quote is, happy is the man that findeth wisdom, and the man that getteth understanding. Proverbs. Now, we might assume that Gann likes to start his works with great quotes. He started his first book, The Truth of the Stock Tape, with a banger of a quote from Emerson about preparation for learning. And that's a really important quote, and you can look that up. There's a lot of context if you look at the original spiritual essays that quote comes from. But Gann may just be doing that here. He's giving you some encouragement. He's saying, you're going to find wisdom in this book. You're going to get some understanding. Maybe. But I've given you a website, BibleGateway.com. You can very quickly and easily look up this quote, BibleGateway.com. Happy is the man who findeth wisdom. And it tells you there's only one result, and it's in Proverbs. So we know it's right. That's where Gann said it would be. Happy is the man that findeth wisdom and the man that getteth understanding. That's all right. Oh, look at that. Proverbs 3:13. Now, 3.14 is pi. We're one number off. It's not unusual for Gann to do that. Maybe that's because 3.13 was a great quote to start the book with, and he figured that people would make the connection. Or maybe he was trying to trick us, or just give it off slightly so that people wouldn't see it, obviously. Who knows? But I see that as pi. I see 313, I think pi. Now that's the first thing, pi. Now why would Gann put a pi reference right at the start of Tunnel Through the Air? Who knows? Maybe this is just a coincidence. And I say this without sarcasm. I say this with all sincerity. Maybe this is a coincidence. I have read and sadly purchased so many books and courses, and I won't name them because the people put a lot of effort into them, and in some cases this is their life's work, but it's not what I believe to be the truth. And the mentors that I've had who have shown me the most amazing stuff would say it's not worthwhile look at, but they will take numbers and they will do the strangest things with them. It's a bit like, if you're an Aussie, you might remember the old 12th man when they're trying to work out the over rates in the cricket after a rain break, and then they take the final answer, the number of balls bowled by the number of balls faced, divided by the average age of the groundsman, and multiplied by the number of spanners in a Sid Chrome toolkit. There you go. I never thought I'd be bringing the 12th man into this, but they come up with these weird and wacky ways of playing with the numbers. This could be me overreacting and reading something that's not there, okay? Always have to keep that in mind, all right? Look for confirmation, and you don't have to go very far, but you can find that confirmation on page 3. So, again, I challenge you, pause this recording in a moment, see if you can find pi on this page. It's a little bit easier than the last one. If you find it, or I should say when you find it, type in the comment section below, found it again. Did you find it? Page number 3. Little Robert went to church one day, and the preacher took his text from 1 Thessalonians 4. 3.14. I don't think that's a coincidence that we've seen that twice, once in the foreword and again 3 pages into the novel. Now, there is the possibility that it's a coincidence. There's also the possibility that maybe Gann liked pies. Maybe he was into dad jokes. Maybe he was just inserting pie jokes and having a little bit of a chuckle with his friends. But I ask you, look at that face. Does that look like the face of a man who would construct a complex science fiction romance novel to make dad jokes about pie? I don't think so. To me, that looks like the face of someone who means business and is dealing with something special and powerful, and that can change our lives as it changed his life. I'll have to dig it out one day. There was a Christmas letter from 1908 of W.D. Gann's that was written just before the 1909 Ticker Investment Digest article. It gives a bit of an insight into who Gann was, and he was so thrilled to have discovered and learnt this stuff, and the awe and respect that he held it with. This is not a man who's putting random pie jokes in Tunnel Through the Air. If he's putting 2 pie references into Tunnel Through the Air, it means something. Now, you've seen pi twice in this book. Take a closer look at this page. Tell me what else you can see. This is the last challenge I'll give you here. This is really important. Take your time with this. If you have to take 5-10 minutes, take your time with it. Tell me what you can see. Now, don't type it into the comment section below. Obviously, people are going to see it if they want to see it. But there's a great quote in the Bible about do not throw your pearls before swine. Now, firstly, I'm not saying anyone who reads this channel is swine. That would be a horrible thing to say. And it's not true, because I'd like to think that the people who are attracted to this site are those who are on a genuine pathway to knowledge and are seeking genuine, real, useful knowledge. And it's my intention to try and help you further along down that path. But as we all know, if you've got any familiarity with social media and YouTube and whatnot, there are trolls out there, and they are looking for something to make fun of and to have a dig at it. And they can make all the fun that they like about this stuff that you're about to see. It doesn't bother me, and it won't change the fact that this is powerful stuff. But at the same time, I also think we need to respect that knowledge and not just lay it out there for people. So if you see it, great. If not, keep it in the video. Obviously, people aren't going to watch through half an hour, 40 minutes of video and see this. So if you have watched all the way through, this is for you. This is your reward. We've got pi. We've got 3.14. Maybe a coincidence. What else have we got? We've got the square root of 2. 1.41. That's the square root of 2. Now it's 1.414, very close to 1.416. Pi, square root of 2, 1.618. That's the golden ratio. You're starting to see the veil just come up a fraction here. I think this is an amazing reference to combine those three numbers. If you've done some work on sacred geometry, which is one part of many of Gann's pricing systems, it is something that he used. It's one part of it. If you've done any work with sacred geometry, they are three very important numbers when it comes to calculating and deriving certain things. Pi, square root of 2, and golden ratio or phi at the end there. All in those first couple of lines on page 3 there. Now you're starting to see these are not just random numbers. Now, it's funny. When I first read this book, have a look at the Bible quote itself. For the Lord himself shall descend from heaven with a shout, with the voice of the archangel and with the trump of God. And I'm sure someone somewhere has referenced that and said, look, Trump was predicted in the Bible. But with the trump of God and the dead in Christ shall rise first. Then we which are alive and remain shall be caught up together with them in the clouds to meet the Lord in the air. And so shall we ever be with the Lord. Now, when I first read this, I thought, tunnel through the air. He's just gone through his Bible and he's looked for a quote that has something to do with the air so he can link it to the tunnel through the air. That was the extent of my thinking, which was not very far at that time. But now my thinking is he's trying to tell us something with the numbers, and then he's weaving the literal Bible translation into the story here. It's a little bit of a which comes first, the chicken or the egg, the quote or the numbers. For me, though, I think that the numbers are vitally important. So I hope that's given you a little bit of an insight into one of the many ways that Gann codes things into the tunnel through the air. And the more that you read this book and the more that you listen to it, even when I was recording that audiobook, I was learning stuff and it was getting more and more ingrained in my head, and I was noticing the repetitions in there, and things start to stand out to you as well. But the more you read it and listen to it, the more this stuff starts to jump out at you. It won't happen overnight, but it will happen. Sound like a 1980s shampoo commercial, if anyone remembers that. There you go. Starting to age myself here a little bit. So that's all for this episode. I hope that you enjoyed it. And I just want to say thanks for watching Aussie Dollar Insights. It's great to have you along on this journey. As a few of you have mentioned to me in emails and whatnot, it is a bit of a lonely journey at times, the Gann journey. So it's nice to have you along for the journey. And I hope that I can, at various stages, provide some insights for you to help you along on that journey. If you haven't already done so, you can subscribe to the channel and turn notifications on to keep up with the latest analysis and updates. And I'll see you next week, Sunday, the 9th of March, 2025 at 7 p.m. for more Aussie Dollar Insights and for more Tunnel Through the Air training. So until then, have a wonderful week. Wish you all the best with your week ahead, with your life and with your trading. And I'll see you next Sunday. All the best. Bye for now.